Sakegesprek met Theo Vorster in collaboration with Momentum Investments. Ian, good day. I want to start with a principle when people talk about the capital market or fixed interest. What does it mean?
Theo, it's basically the long debt market. So typically we all know the banking market, we go for overdrafts, we go for our credit cards and so forth. But what does companies, state-owned enterprises do to finance large capital projects? They actually come to the capital markets, the long duration assets. So we typically talk 3, 5, 10 longer tenors. And it's typically the interest rate market, so it's debt-bearing instruments. So we're not talking about equity where you take a stake in a company. We're talking about debt markets where there's a maturity date on the instrument and you get paid coupon semi-annually, annually, quarterly, whatever the instrument is. So we're talking about long institutional debt markets.
Where does that fit into a portfolio?
Well, we think it's a crucial, essential part of any portfolio, because if you think about a portfolio, it's got equities and it's got property and offshore, which is very volatile. So what fixed income does is actually give you stability and certainty, because unlike equities where you don't know what the dividends are going to be, with fixed income you know that I've put my money out there for 3 or 5 or 10 years, and every year I'm going to get 7 or 8 or 10% of interest, and on that maturity date you get 8% into your account. So it gives you a lot of stability in your portfolio against the other volatile components of the portfolio, but it is interest bearing.
I think what needs to be stressed is in every balanced portfolio, whoever assists you with the structure of the portfolio, a capital market or fixed interest component must be there. But in that fixed interest component, there is also different multi-issuers, and you need to manage those issuers and the different elements in that. Just talk about that.
Very importantly, Theo, because when we talk around fixed income, it's not just about one asset class, and we always love to talk around bonds, but it's not just bonds, it's just one pillar of it. I think it's important in your overall portfolio to have a cash component. Cash is quite important in volatile markets. You want to have exposure to credit, so you want to have a bit to Naspers and MTN and Vodacom exposure in credit. The third pillar is the bond component, so typically government bonds, SOE, government guaranteed bonds. The fourth pillar we would look at is inflation-linked bonds, because that is one of the true ways to protect your savings against inflation. And the fifth pillar then would be the market that's really opening up and exciting us is the private debt markets, where as an individual you can actually get exposure to, let's say, this institutional unlisted market.
Let's talk about the private debt market. What kind of issuers would you typically find there?
Typically, if you look at the JSE, you'd probably find that there's about 50 issuers of long-dated debt. In this private debt market, we think there's about 350 of these issuers. Now, typically in days gone past, investors always used to say, "Oh, the private debt markets, unlisted, unrated, these are poor quality, high yield counters." We say, no, that's not true. We are finding great quality companies. They may not be credit rated or listed, but the balance sheets look terrific. We're finding good opportunities in that market, and it's typically the way that, if you think about the PPP model, where the new way that South Africa is going to finance infrastructure between government and private partnership, those entities will come to the private debt markets to finance those capital projects, not necessarily on the listed JSE market. And that's why we think this is actually the vehicle for investors to get exposure to that private market, to those infrastructure assets.
Ian, this is exciting. How does the investor get access to this market?
They're very simple. So we've got a vehicle in Momentum called the Momentum Income Plus Fund. And through a monthly debit order of around 500 Rand, the individual like yourself can actually get access to this private institutional debt market and actually have access to this big infrastructure spend that we're going to see in South Africa and the financing thereof. So yeah, we are very excited for individual investors to actually access this vehicle.
Ian, thank you very much, and I wish you all the best. I think this is the kind of vehicles that will make a difference in South Africa. Thank you very much, Ian.
Thanks, Theo.
Sakegesprek met Theo Vorster in collaboration with Momentum Investments.